What is the stock market? The stock market is a group of exchanges where shares of companies that are owned by the public can be bought and sold. These kinds of financial transactions take place on formal exchanges and over-the-counter marketplaces that follow a set of rules. Stock exchange and stock market are often used the same way. On the stock market, traders buy and sell shares on one or more of the stock exchanges that are part of the stock market. The New York Stock Exchange and the Nasdaq are two of the most important stock exchanges in the United States. Understanding the stock market. The stock market is a place where people who want to buy and sell securities can meet, talk, and do business. The markets let people find out how much shares of companies are worth and act as a barometer for the economy. As people compete in the open market, buyers and sellers can be sure of a fair price, a high level of liquidity, and transparency. How the stock market works. Stock markets are safe and regulated places where people can buy and sell stocks and other financial instruments with confidence and little to no operational risk. The stock markets are both primary markets and secondary markets. They follow the rules set by the regulator. As a primary market, the stock market lets companies sell their shares to the public for the first time through an initial public offering. This helps companies get the money they need from investors. A company splits itself up into shares and sells some of those shares to the public at a price per share. A company needs a place where these shares can be bought and sold for this to work. The stock market is that place. A company that's already on the stock market may also offer new shares later through rights issues or follow-on offerings. They might even buy back their shares or take them off the stock market. Investors buy company shares with the hope that the value of the shares will go up or that they will get dividends or both. The stock exchange helps the company and its financial partners raise money and gets paid for its work by the company and its financial partners. Investors can also buy and sell securities they already own on what's called the secondary market. This is done through stock exchanges. The stock market or exchange keeps track of different market level and sector-specific indicators, such as the S&P 500 index and the Nasdaq 100 index, which show how the overall market is moving. What are the functions of a stock market? The stock market makes sure that prices are clear, that there is enough money to buy and sell, that prices are found, and that trading is done fairly. The stock market makes sure that all interested market participants have access to information about all buy and sell orders. This helps prices for securities be fair and clear. The market also makes sure that the right buy and sell orders are matched quickly. The price of a stock needs to be set by its buyers and sellers working together. This is called price discovery. Those who meet the qualifications and want to trade should be able to place orders right away, and the market should make sure that the orders are filled at a fair price. On the stock market, investors, traders, speculators, and hedgers are all types of traders. And investors can buy stocks and keep them for a long time, but a trader can get into a position and get out of it in a matter of seconds. A market maker makes sure that the market has enough liquidity, and a hedger may trade in derivatives. How stock markets are regulated. Most countries have a stock market, and each one is overseen by a local financial regulator, monetary authority, or institute. The SEC is in charge of keeping an eye on the stock market in the United States. The SEC is a federal agency that's not part of the government and doesn't take orders from politicians. The SEC's mission is to protect investors, maintain fair, orderly, and efficient markets, and help people get money to invest. Companies that trade on stock exchanges are regulated, and the SEC keeps an eye on what they do. Also, the exchanges have rules that make sure everyone on the market has the same information. For example, Quarterly financial reports must be filed on time, and important changes at companies must be reported right away. If the rules aren't followed, trading can be stopped and other punishments can be taken. So, that's it for today. Was this video helpful? Share your views in the comment section below. Also, don't forget to subscribe to our YouTube channel. Press the bell icon for all the latest updates. Thanks for watching.